On today's episode, I'm going to take a quick look at 4 stocks I'm planning on buying or adding this upcoming week. This past week has been great. I mean, it's probably been one of the best weeks that we've seen in the overall market. And that's not the reason I'm buying, right? I do have this kind of weekly rule where every single week I buy stocks no matter if they're up or down. I do want to say with the overall stock prices kind of going up in the past few days, I do believe there is a higher chance that we might see high volatility this upcoming week. So something to keep in mind of, right? I do believe emotions work both ways during the downtrend when sometimes we always want to buy the dip. It also works the other way when we see stocks going up and up, we always want to buy the rip. So just be careful, and that's why for me this kind of weekly investment keeps me in check of not having my emotions take over. And today I'm actually going to talk about one stock that I don't have in my portfolio, and that is going to be Apple. This is one I'm starting to look a little bit closer, especially with the recent tech that they announced. I believe there is some potential there. So stay tuned for today's episode. If this is your first time here, make sure to hit the thumbs up, make sure to hit the subscribe button, check out the pinned comment for free Discord, free newsletter, and a lot of great investing links. So let's get started. All right, so let's just jump into the 4 stocks we're going to look at today, and that is going to be obviously if I'm here, is going to be a semiconductor company, and that's going to be AMD, which is down over 29% from its all-time highs. Next, I am a huge fan of what Meta Platforms is doing. I know a lot of people are not liking it, but for me, Meta Platforms is one that I believe has huge optionality and huge potential. Right now, it is down about 43%. Next, we're going to take a quick look at Apple. This is probably the one that's down the least. It's down roughly 10% from all-time highs. And finally, we are going to take a quick look at Shopify. Shopify is down over 53% from its all-time highs. All 4 companies hit different markets. All 4 companies I want to show you are strong in their fundamentals, right there, and that's what we want to look at. Fundamentally strong companies that have huge optionality growth. So let's take a quick look at fundamentals here. I'm going to take a quick look at cash flow from operations, cash and short-term investments, and long-term debt. One of my favorites out of the 4 is Meta Platforms. This has plenty of cash flow from operations. It has tons and tons of cash and no debt at the moment. And this is why I do believe it's okay for them to kind of be testing out some of these new strategies, and we're going to talk about them in a bit, but it is because of that strong kind of fundamentally stable company. Next, we have AMD. AMD also comes in with high cash flow from operations, and very, very low debt. One of the things I'm super excited about AMD is their acquisition with Xilinx that has finished off and the overall potential that can bring to the company. Next, we're going to take a quick look at Apple. Apple has plenty of cash flow from operations, plenty of cash. They do have more debt, but this is a company that I believe is using their cash. Instead of using their cash, they want to have the money work for them instead. Finally, we have Shopify. Shopify has tons and tons of cash, about 7.7 billion, debt of about $1 billion. So they have plenty of cash compared to debt, and they are also positive in cash flow from operation. One thing about Shopify is this has become a toolbox for the markets that they hit, and that's what I like to invest in, toolboxes. Let's take a listen to today's sponsor. I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services the Fool offers. Through the Motley Fool Stock Advisor services, you get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done amazing returns. If growing your money is something you like to do more of this year, you can visit fool.com/Jose Najarro or click on the link below for access to my special offer and decide if the Stock Advisor is right for you. Thanks again to the Motley Fool, and now onto today's video. If we also take a look at quarter year-over-year revenue growth, we can see all of them are still growing at impressive levels. Even though they're not as high as previously, Meta Platforms' most recent quarter grew 20%, AMD grew 48%, Apple grew 11%, and Shopify grew 41%. Right, we are kind of seeing about a downtick compared to how they were growing previously, but still, I do believe these are strong growth rate numbers. So again, fundamentals, I enjoy all of them, and at the end of this episode, I will talk about which ones I enjoy or want to purchase a little bit more than the others. All right, so first let's start off with Apple. Year to date, we can see is down about almost almost 10%. And we can say in the past 5 days, it has been super strong, about 8.2%. So again, we are seeing the stock market, at least last week, kind of rip up. That is not gonna give me any form of emotional investing to go and purchase a lot more because I'm fearful of missing out on the gains, right? For me, it's that weekly investments, and for me, dollar cost averaging is super important. One of the things that really has me looking at Apple right now is they recently unveiled the M1 Ultra, and this is this pretty awesome chip where they kind of created something that some of the other semiconductor giants have not done, and that is kind of make two chips work as one in the graphics department. You have a lot of competition in this market, and some of the other players have kind of worked with it. The way M1 Ultra has been announced, it seems they have kind of made the holy grail right now. Obviously, a lot of the numbers they have shown are first team number reviews, so kind of take them with a grain of salt, but this is something I'm going to keep a closer eye out. The M1 Ultra, I do believe, has for them huge potential in future items, not just for their phones, not just for their iPad tablets, but they have huge optionalities if they want to enter, for example, the virtual reality headset goggles, if they want to enter maybe more of some form of chips in a future production of maybe a smart car that they might be chasing, which hasn't really been announced. But I do believe this kind of M1 Ultra, the engineers there are just continuing to impress me, and that is why I'm taking a quick look at Apple. Obviously, this is a nice giant. Overall, might not be the best return or might not be the best high growth, but it does have a dividend of about 0.54%, and it is a super strong company with fundamentally stable at the same time. Next, if we take a quick look at my second company, this is going to be AMD, currently sitting at 113. So some of the things I'm super excited about AMD. First is the recent acquisition of Xilinx. This recent acquisition of Xilinx is giving AMD a whole new market to kind of focus on. First, the FPGAs and the adaptive system on chips, which are helping them enter in the, for example, the automotive market, in the defense market, aerospace market, and increase the overall solutions that they have in the data center market, which I believe has huge growth potential. The second reason I believe is AMD, prior to the acquisition, they were doing super strong with their EPYC processors. The EPYC processors are the ones for data centers. Those continue to grow, and in their most recent quarter, they did mention that they had doubled year over year. I believe the data center market that AMD is hitting, it's only getting stronger. Their processors are in huge demand, and like I mentioned, with the acquisition of Xilinx, I'm enjoying this kind of data center potential for AMD. Now, if we take a quick look at Facebook, again, similar to everything, they've all ripped a lot in the past 5 days. Be careful, but at the same time, if you have a plan, just stick with your weekly investments plans. So Facebook has recently taken a hit for numerous reasons. One is Apple with their kind of tracking stuff. The second is Facebook has seen a little bit less demand on their Reels, or not being able to monetize that as well. Facebook Reels, I do believe, has huge potential, and Facebook needs to go with that. I do believe form of short video content is the next big thing in social media. We're seeing it all around, and we're still in early stages. So Facebook is focusing on that, and instead of becoming profitable at the moment in that, they just want to kind of train rush it, and kind of get that exposure as much as possible. For example, they just recently announced on February 22nd that they are launching Facebook Reels globally, right? First, it was just being tested in a few places. Now they're kind of doing it globally as of February 22nd. Again, this is way for them to kind of grow this market as quick as possible, especially with the heavy amount of strong balance sheet that they have. They have plenty of cash flow from operations. So they should kind of, if they see the opportunity to grow, they should grow as fast as possible, regardless of how much it might have impact on their top line numbers in the short term of things. That's the type of investor I am. I know certain investors might be a little bit more conservative and might kind of argue with that position. I do want to say Meta is also building the metaverse in their own way. I don't believe maybe their metaverse might be the best, but I do believe that they're hiring a lot of engineers, and a lot of these engineers are going to find new tools that Meta will be able to focus. They're hiring engineers in the virtual reality market, in the artificial intelligence market, in the data center market, and who knows, through all these innovative engineers that they have under their team, they will be able to find some crazy products that makes Meta one of the leaders in the techs within the next few years. The final company is probably the one I'm a little bit more aggressive with right now, and that is Shopify. So Shopify has become pretty much a toolbox. This is an insane tool for the e-commerce world. We can see every single year they continue to add new solutions for their platforms. I mean, right now they have over 8,000 applications to kind of improve their ecosystems. I have actually personally gone and opened up Shopify stores to kind of see the process. And let me just say, this is the one-stop shop. It was easy for me to set up everything I needed. I have all, and if you look online, if you look in videos to try to find ways to open up an e-commerce store, this is usually the number one searched item or the number one viewed item. How to open up a store in Shopify. What are some of the best tools to use within Shopify? Because it has become this kind of awesome toolbox for the platform. 2021 was a huge year for Shopify. They kind of in February 16th, they shared their overall success, and Shopify for the first time brought more than $1 billion in merchant solutions revenue in a single quarter. That's insane, because only 6 months earlier they hit $1 billion in quarter for total revenue. So you can see the huge growth that this company is seeing. Again, I don't believe e-commerce is going anywhere. I believe it's going to continue to grow. Digitalization, the overall digital transformation, is going to continue to grow around the world, internationally, and here in the United States. So I think Shopify is a huge potential player. Now, the last thing I want to take a quick look at is stock prices here and charts, and I just want to show which ones I'm a little bit more aggressive on if I was to purchase. Right, for me, my overall opportunity is dollar cost averaging, but when I dollar cost average, sometimes I buy a little bit heavier in certain companies. If I was to, I think the ones I would be the most aggressive on would be Shopify and Facebook. These are still, in my opinion, sitting at very attractive levels. Then I want to say AMD would kind of be somewhere in the middle, where I wouldn't be too aggressive, but I wouldn't be too conservative. The only one that I personally would think I would be a little bit conservative in would be Apple, just because, right, it hasn't fallen much from all-time highs. That's okay. This is a big giant. They have pretty much nothing to worry about, but I do believe maybe in the future I'd rather do more of a conservative dollar cost averaging and add over time when I might have better buying opportunities. At the same time, I do believe I want to get some skin in the game. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you next time.